my opinion, is commodities for so long now, since the 70s, 80s, have been controlled by paper contracts. Mm-hmm. And what's happened is they've over-shorted contracts throughout the entire commodity spectrum. And, that's fine, except for taking into account the real world, real supply and real demand. So what they've done is they've priced or underpriced commodities for so long that now you've got you have structural issues. I mean, take silver. Silver's in a structural deficit of 400, 500 million ounces per year. And, if you could make the case that there's 200, 300 paper ounces for every 1 real ounce that exists. Utility is not the right word, because think about all the uses for silver. I mean, you've got medicinal, industrial, technological. I mean, every time they launch a Tomahawk missile, that's a monster box flying through the air. The thing with silver is that there's end use for it. I mean, when gold gets bought, gold is money. Gold gets, like Warren Buffett says, it gets bought and then it gets put in the dark and you never see it again. The thing with silver is it gets used. It gets used, and you can get some of it back, but it's only some of it or a small part of it. The structural deficit, and getting back to the importance of silver, I've said all along, and I still maintain, that silver is the fuse, if you will, to gold's financial bomb. Because when gold blows, when gold goes into failure to deliver, then you've got pretty much confidence across the world is going to collapse. Because, I mean, think about it. What's the value of a contract that cannot perform? The value is zero. So silver is such a small market. I think at current prices, you're looking at maybe 30 billion total production worldwide for a year. It's just such a small market in relation to gold. And you can't have silver exploding. You couldn't have $200 silver, in the short term. You couldn't have $200 silver and $3,500 gold. I mean, the ratio would completely collapse, and that would lead to a failure to deliver. If silver goes failure to deliver, I guarantee you within 72 hours, so will gold. And when gold goes failure to deliver, the financial system as we know it is done. The deliveries were made. It was said back then that it was because of the tariffs. I don't really. I think gold was being onshored or brought back. And another thing that's going on that almost no one's talking about is that you have foreign central banks that are demanding gold back from the Fed. And if you remember 10 years, 12 years ago, Germany requested, 320 tons or something like that. And it took them over 3 years to do it. And at the time, they were saying that, it's too much weight. It can't be done. The logistics just can't be done. Well, we just saw that it can be done. And 320 tons, you could do it with 4 plane loads with Boeing 747 cargo planes. They can carry 95 tons each.
What if the U.S. government can't deliver the requested gold back?
That completely breaks all trust in the United States. Would you ever do business again if you were a foreigner? Would you ever do business again with the United States? And they've already come pretty close to that by sequestering Russia's $300 billion in Forex reserves in treasuries. And now they're taking the interest from that $300 billion, and they've been giving it to Ukraine to fight Russia. I mean, so basically Ukraine's fighting Russia with Russian monies. The dollar would get smoked on that. I mean, there's no question about it. If you go back to the Russian reserves, you go back and you look at a chart of gold, and you can see to the day, it was October of 2023, I think, when gold lifted off and came out of the range of the 1,700 to 2,200 or thereabouts. But the following day after that was announced that those reserves or those treasuries had been sequestered, gold all of a sudden kicked into, it started looking like a tractor in first gear going higher. And that is a function of trust.
Is there historical? Go ahead.
foreign central banks just looked at that and said, hey, wait a minute, if they can do that to Russia, they can do that to us. We'd rather hold something that we actually hold, we know cannot go bankrupt, we know cannot be diluted. It's God's money. But I think we're going to go through at least one, maybe two resets before we get to the final reset, the Mother Nature reset. The first reset, I mean, there's no doubt in my mind that they're going to try to do some type of central bank digital currency or whatever, stable coin. It's still going to be fiat. And I don't think that that's going to last much more than, I don't know, maybe 6 months. Could be less than that. Could be a little longer than that. But I think we're going to go through a reset, and they will mark the price of gold up on that reset. But we're still going to have a fiat currency. And whatever the end result, as far as what the world reserve currency is going to be, it will be tethered somehow, ratio backed or whatever, to gold. There's no way that the world is going to accept the situation we're in now. Again, ask when's the reset, and I just tell them you're watching it in real time. I mean, think about this, Danny. Okay, so gold was $1,700 2 years ago. Now it's $3,400, double. Any asset that is the same price that it was at the end of 2023 has lost 50% of its value versus gold. And gold is the measuring stick. It's not the dollar. It's not the yen. It's not the euro, the pound, whatever. The measuring stick is gold. And that's why when people ask me, are we going to have inflation or deflation? Well, we're going to have inflation of the things you need, food, gas, etc., and deflation of the things you have. And the deflation of the things you have, not necessarily in dollars. You could see an asset, you could see a piece of property double in value and gold go up 4 times. And that thing that doubled in value has lost 50% of its purchasing power versus gold in that time. So gold is the measuring stick. What have central banks been doing for the last 2 years since the sequestering of the Russian treasuries? Central banks all over the world have been buying gold. That's about as inside as you can get.
Any other signals that you look for when it comes to gold and silver?
Because I believe that this has to be a credit/currency event. I think if all of a sudden you started seeing wild volatility in currencies, if you started seeing bigger volatility in or on the U.S. Treasury curve, I mean, this is going to be a credit/currency event. And if you start seeing, wild gyrations, or not even wild gyrations, just a movement upward. If you see rates go through 450 on the 10-year Treasury and you get a 5 handle or over a 5 handle, I don't think markets can handle that. And I think that would be a signal to foreigners that the game's over. If the Federal Reserve cuts rates, say they cut it 1%, 2%, and rates don't go down or go down very little, or in my opinion, ultimately rates are going to go higher rather than lower, that would break confidence. Now, in the real world, what does that mean? You're already looking at a super soft real estate market, housing market across the country. Commercial real estate is already in the middle of a crash. Higher interest rates will smoke the real estate markets. Higher interest rates make it harder, more difficult to carry derivatives. And the world is awash. It's flooded with derivatives, and those derivatives are what price assets. You'll see derivatives begin to default, and then you get a cascade. And once derivatives default, you're talking about over $2 quadrillion worth of derivatives, which is way, way, way more than the value. It's probably double the value of every asset on the planet. So it'll be a paper bonfire, 100% guaranteed. I mean, you cannot have